Welcome to the Norris Group Real Estate Podcast, a show committed to bringing you insights from thought leaders shaping the real estate industry. In each episode, we'll dive into conversations with industry experts and local insiders, all aimed at helping you thrive in an ever-changing real estate market, continuing the legacy that Bruce Norris created, sharing valuable knowledge, and empowering you on your real estate journey. Whether you're a seasoned pro or a newcomer, this is your go-to source for insider tips, market trends, and success strategies. Here's your host, Craig Evans.
Welcome back to part 2 of our interview with Chris Thornberg, founding partner of Beacon Economics. Let's get to it. Hope you enjoy.
Well, what's really interesting about what you're saying is the timing of that is very different than between 74 and 80 because of the level of debt that already exists as opposed to what it was back then, because interest rates doubled in that 6-year period. And do you remember what happened to real estate prices in California? They went from 35 grand to 105. Your interest tripled, your interest doubled, your price of your houses tripled, and it was ridiculous. So you didn't even have a downturn in real estate, but you did end up having massive unemployment, and your payment, of course, if you bought in 1980, which I did at 17.5%,
right,
was crazy.
Yeah.
So, okay, but we don't have room for that. We don't have room for an 8% mortgage rate at our current median price, right? There's no place to put that dollar. So, okay, so let's play that out. Let's say we get an 8% mortgage. What do you see for real estate?
How about a 9% or a 10% mortgage?
Yeah.
I absolutely. Well, at some point in time, interest rates become so high that prices, well, I'm not sure they're going to come down, but I can see the market.
What you just said, think about what the guy that has the 3% mortgage feels now that the mortgage is 6. I got a deal. That 6% mortgage will feel like that at 10.
Yeah.
And I don't know that anybody will put their house up for sale unless it's an urgent something.
Yeah, exactly.
Yeah, you may just have the same numbers, okay, a balance, but it'll be 100,000 sales instead of 250.
Yeah.
Wow.
You got it. So, yeah, and so this is what I'm worried about. This is the scenario, and this is where the hit's going to come from. I believe there's a whole other interest rate increase in front of us, and and again, all this boils down to where we are as a nation, because say what you will about the 70s and 80s, I still think that people were hopeful. I think they appreciated the gains in life. 70s were rough, I get that. We had to deal with disco. It was awful. That said, we still had, if you will, I think a collective sense of things are going to get better, right?
Well, in the 70s and 80s, your wages went up. You know, what's interesting about that, because I've done the math of that, I was fortunate enough to get access to data breaking down the cost to build a home from 1970 to 1980, every labor part, every plumber supply. Yeah, it's fantastic. Now, what was really interesting is I took that, I'll send you those charts. You would love them.
Yeah.
So you go out and, okay, the cost of the labor went up 120%. Let's say your plumber was 5 and now he's 12 or something like that. Well, you know what happened to his buying power? It was 75% of what it was in 70. He got all those raises, and his net was not a gain in purchasing power. It was a loss. So here's our problem, is that we don't have room for that to be negative right now. So a 10% mortgage rate from here would be devastating because there's no place to put that, nowhere.
Yeah. Well, again, I think that people are better off now in a lot of different ways than were in the 70s. I think real incomes are much, much higher. Quality of life is much, much higher. From my perspective, again, I'm going to push back because you have you continue to go back to what I would call the standard newspaper conversation argument, which is that somehow or other American households today are struggling when they're not. It's as simple as that. Again, we are in a period of time in which consumption at every level of the economy is at an all-time high level. And that's the measured stuff. It doesn't include the other unmeasured stuff. In the 1970s, you couldn't get on a FaceTime call with your grandma on the other coast. You had to make a long-distance phone call or write you remember this? A letter. And then you had to wait a week to a week and a half to get a reply letter.
Right.
And you had to buy these things called stamps to send those things. You couldn't do it in email. You couldn't simply order something from Amazon and have it on your doorstep the following morning at 5 a.m. We live in a world that people in the 1970s and 80s could only dream of in terms of convenience and consumption. We had to watch commercials, Bruce. Remember those things?
That's right. We didn't have to put skip, huh?
Yeah. And my kids actually watch a TV show now on some network, and they'll just sit there and look at me like, what are these commercial things? Why do we have to watch these? And I'm like, suffer, kid. I had to live through, or you can too. But it's true. But we are so wrapped up in this weird idea that we're struggling and suffering and people are starving in the streets. I've never heard anything like it.
Now, what I meant is if you gave us a 10% mortgage rate.
Oh, yeah.
That's what I meant. Not that we are now, but that would kick in some problems.
Oh, it would create huge problems, and it would be a whole other reset in the real estate market. And this one could actually cause prices to come down. At least in real terms, not nominal, but in real terms, they probably will come down. It's worth noting that, yes, real estate prices went up in the 70s, but if you controlled for inflation, they actually went down.
That's right.
So that's part of the conversation you got to keep in mind in an inflationary environment. And of course, remember that once that kind of inflation surge kicks in, those interest rate premiums stay up for a long time. So even after you get rid of the inflation, well, think how long mortgage rates were inflated.
A long time.
Past that point in time, a long time. So there are long-run consequences to what I'm talking about here. But to me, I think economically, the reality is we can survive it. We can manage as a nation. People can tighten their belts a bit. Maybe they could spend a little less here and there. And more or less, we can get through this. That's not the problem. The problem is that people think they can't.
Okay.
And it's the politics that worry me more than anything else. Look what's happening in both political parties right now. The populism that infected both parties and are making both parties, Looney Tunes is the only way of putting it. This constant nonstop rhetoric of everyth's terrible and it's all the other guy's fault because they're evil.
Right.
That populism that is driven by these false stories of decline. And when we are forced to tighten our belts because of basic economic realities, my fear is how that plays out from a political standpoint. I mean, who do we elect next? And what are they going to tell us that we want to hear?
That we want to hear that we really shouldn't hear.
Yeah, because bad people come to power during these kind of crises.
That's right.
And it's the kind of thing that we as a nation, we like to think we're above that. We're not.
I had a moment when I was at a baseball game. It was after 9/11. And national anthem began, and 45,000 people stood and sang. And I was like, whoa.
Yeah.
Everybody here is an American today. There's nobody that's different. We're all American. That was a very cool feeling, and you don't get that one very often. So
And it's sad that it takes a tragedy to get us to realize that.
Exactly. Yeah. Are you concerned about the risk of the United States losing world currency status?
No, no, not in that sense, because where are they going to go?
That's exactly right.
Now, and mind you, the scenario I'm talking about that as I see it playing out will also include a big decline in the value of the dollar. It will give much less buying power on the world stage. But that said, where are they going to go? I mean, the one thing that buffers this scare scenario is the reality is as much as we're the biggest problem in the global stage, we're also still the safest place to hide your money, at least for now. That may change in the future. But for now, we still are. And as our problems expand around the globe, you may find people wanting to put money here just because they still believe that the rule of law here operates better than it does most any place else. Look, you could put your money in Europe. It's got a very good legal system. It's a very safe place politically. But that said, you're not going to get a lot of return on it.
Right.
You're not going to go to China.
No.
They're certainly not going to go to Russia. India is still a basket case. The emerging markets, while there are dots of promise and prosperity, for the most part, they're not places you trust your money for the most part. So yeah, it's there are not too many places to go. But just because we remain the world reserve currency doesn't mean that somehow or other we're not going to have to suffer the consequences of the excess that we're dealing with right now.
Okay. Last topic is, artificial intelligence. What's your take on that progression? Because I guess that's the word that I'm most concerned about, because it seems like the end game is a very powerful entity, country, company, and getting there first seems to matter a lot.
Does it?
What's that?
I don't know. I kind of disagree with you on that. In fact, that's one of the reasons why I'm so dismissive of these stock market valuations. Look, Google was way behind, and then went, okay, and now they have the best engine. And the Chinese just basically said, oh, that makes sense. They read a couple articles, and they're coming up with their own engines. And they're not as good as ours, but they're a hell of a lot cheaper. I actually don't think AI is, shall we say, that hard to reproduce. We're learning very quickly that there's lots of ways of doing it. And that's one of the reasons why I don't think that this is going to be, that this is a bubble, that these valuations don't make sense. Well, now, again, it doesn't mean it's not a transformative technology.
Okay.
But, look, let me take a step back. Is it a transformative technology? Sure. Have we had transformative technologies enter our world in the past? Oh, hell yeah.
Yeah.
Electricity, computers, the internet, the telephone and telegraph, railroads. Railroads are a classic example. You want to talk about a transformative economy. Holy cow. I mean, what railroads did to the economy from 1850 to 1900, wow. I mean, they changed everything, right?
Right.
So we've seen this game before. There's no big surprise here. By the way, we had 2 mild depressions in the United States caused by railroad bubbles popping, okay?
Okay.
Despite the fact, even as the railroad changed our world, we also had major financial crises driven by it. So again, what I'm saying about the perils of this bubble and the value of this technology, it's backed up by history. I'm not just blowing smoke. I mean, you've seen this game before. And also this idea that it's going to transform everything. Well, what about the new economy? Remember the new economy in the 1990s? Wow, we have pictures on the web. It's a new economy. Okay. Well, now we have a computer that we can talk to as opposed to writing code for. To me, it doesn't really solve some of the fundamental problems that we've been talking about. Again, they oversell everything. AI will become more of a force. It'll hopefully create productivity gains, and that's good because, we saw last burst of big worker productivity growth from about 1996 to about 2008.
Okay.
And that was basically wrapped around the World Wide Web. So yes, the World Wide Web didn't create a new economy, but it did help worker productivity, and ultimately that benefited everybody. And I think that's one of the things the AI can do. I don't think it's going to take everybody's job. I think it's so violently overstated. Will it take some jobs in some places? Sure, but that's how the world works, and we just have to learn how to change, right? We need to learn how to learn. Look, labor is a resource, and if less labor is needed in some places, it will go find other uses in the economy. The one problem we really have in the United States right now is we don't have enough workers. So great. Let it replace some of the dumb jobs. Let's have AI drive every single truck. And then all those people who are driving trucks can go out and do other things. They can be teachers. They can be, nurses. They can be, whatever. There will be other opportunities for these folks in the economy as long as we have the resources to help them shift gears. But I want to say something about AI. Because again, I want to go back to the idea here about the miserableism, this idea that everything's terrible and everything's tragic. And you think about how people get pulled down these rabbit holes. Like, how do they start believing this stuff? How does this stuff get into them? And guess what? A lot of it comes from, well, the internet.
Yes.
A lot of it comes from the news stories we're fed. There's a great book called The Chaos Machine by Max Fisher. And in this book, he discusses how, for example, Google wanted people to watch more YouTube. And what they said was, well, let's stop having people deal with this. Let's have an AI engine, because AI is not new. It's been around for a while. There's nothing particularly new here. They said, let's let AI figure it out. So they set up an AI engine that basically figured out how to keep people watching longer. And it would just feed people random stuff, and it would see what keep people glued to the screen longer. Seems relatively harmless until you look closer. And what you realize is that what keeps people really glued to the screen is being scared or angered.
Okay.
And as a result of that, what you saw is AI more or less feeding people more and more dramatically negative things until people became absolutely terrified of the world, right? Absolutely positive, until they're showing up at a pizza parlor with a gun looking for the pedophiles. Okay, we all know about Pizzagate and all that stuff, right?
Okay.
Now, this is on a relatively simple form of AI. Now, go back to what I was saying about the political situation and the miserableism and the fact that we are so convinced about an economic reality that is not reality in any stretch of the imagination. And now put us into, if you will, the target of all these new AI engines. My fear about AI, like I see the promise of AI and the increase in worker productivity, but I see the peril of AI of taking our sense of persecution and magnifying it even more, of making us convinced of more false concepts of the world around us.
So it would have a very negative society attitude.
Yeah, and that could be way more dangerous than the promises it gives us.
Right.
And that's where I start to really get worried about this stuff. I'm not worried about lost jobs. I'm worried about lost sanity.
Right. Okay. I think it's a great way to end, and I appreciate. I always enjoy talking to you because I get to ask stuff I don't know the answer to.
And some of this I don't know the answer to either, Bruce. I got to tell you, look, over the last 10 years, I've gone through a big transformation because I continued to watch people tell me how terrible everything was when I looked at the data and saw how good things were. And I had to take a step back and start to recognize that a lot more of what goes on in the economy is a function of this gray stuff between our ears and what happens up here. And the fact that what we think is going on is an incredibly biased version of what's actually happening. And to be clear, I'm not the first guy to figure this out. I'm pretty sure it was Jesus who talked about sooner will you see a speck in another eye than a log in your own.
Right.
He was talking about the same stuff.
What's interesting,
and it's all been intensified.
I didn't even hear this is a shame on me type thing. I really didn't know what AI was 3 months ago. So not that obviously I'm not an expert on it, but I've been trying to get myself. And here's the embarrassing thing. We have a seminar next month where, I'm talking about charts and stuff, but I had to delegate the AI chapter because I bought 3 AI books. One of them was AI for Dummies. And I read the first chapter and I had no clue what I just read. And I said, I have no business teaching this chapter.
Yeah. No, I hear you. But with all that being said, remember, the World Wide Web was pictures on the internet. And the current version of AI is a fancy version of machine learning, but machine learning that now allows computers to deal with us in words that we understand rather than in code that it understands.
Right. Okay.
But that said, machine learning is nothing new. It's been there for a very long time. It's just a new glorified version of it, which of course they're selling as something completely different. It's not. It's just another step in the process of this technology's growth.
Let me mention one thing that I learned, and I had to think about that being so impactful. There are cities now where you don't have drivers in transportation cars, right? You have
Waymo. Yeah.
San
Francisco.
Okay.
Yeah.
Well, one of the things. Do you know who Sean O'Toole is? I think you'll recognize that name. Okay.
Yep. Sure.
Very, very smart tech guy, and he told me what's interesting about those cars is they actually learn from each other from every experience.
Yeah.
Every car is connected to, like their brain is connected to every experience simultaneously with every one of them. What just said to that? Yeah. There's guys that are way up in the AI world, they own the companies and all that. They just said that about surgeons. When you have an electronic surgeon, a robot, that robot is learning from every other surgery that's going on.
Yep. And
their learning curve obviously goes up. So I was, whoa, that's interesting.
Yeah. But that said, they still don't have a robot that can do an open heart surgery.
I think, I want us to talk about 2 years from now. Not that I'm hoping they have, but I think they will.
We'll see.
Yeah.
It might make medicine a lot cheaper.
Well, oh no. See, you think about that. That's exactly what's part of that, they're always talking about, what do you call it? Where you get paid for doing nothing, that there'll be that world. And I don't want that world either, but a lot of the jobs will be devalued in the sense that a machine that can work 24 hours a day and be perfect at the task, apparently is coming in a few places. I haven't bought into all this, Chris. I am studying it now and realizing how far behind I am and how my vocabulary is to comprehend it.
But they always oversell every technology, and you're going to get into it and you're going to find it's way harder than it looks.
Yeah. Well, I don't buy stuff. Just like other people's statistics, that's why I finally decided to figure it out on my own, because I'm going, I'm not buying it. I want to know. Well, that's what I'm trying to think about AI is, okay, I'm going to learn it, but I'm going to not buy the journey everybody is saying. I'm going to try and understand it, but it's a topic that's over my head right now. That's for sure.
Yeah.
All right. Thanks for joining us, Chris.
That's going to do it for this week's episode. Be sure to tune in next week for part 2 of our interview with Chris Thornberg of Beacon Economics. And be sure to get your ticket to Beyond Uncharted, What's Next Has Never Happened, Bruce Norris's newest market timing report, to be released on February 7th in Ontario, California. 20 years after the California crash, Bruce Norris is set to deliver another can't-miss event. For tickets, visit www.thenorrisgroup.com and check out our events page. Hope to see you there.
For more information on hard money loans, trust deed investing, and upcoming events with the Norris Group, check out thenorrisgroup.com. For more information on passive investing through the DBL Capital Real Estate Investment Fund, please visit dblcapital.com.
The Norris Group originates and services loans in California and Florida under the California DRE license 01219911, Florida Mortgage Lender license 1577, and NMLS license 1623669. For more information on hard money lending, go to thenorrisgroup.com and click the hard money tab.